Today we see market breadth improving with the small caps leading the way higher as the S&P 500 is relatively flat. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart, see what's going on in the stock market today. All right. Don't forget you can still claim the Memorial Day sale for 50% off bank trade alerts or the stock channel Discord. All right, so today SPY was up 0.22% and we're right back to the upper Bollinger Band as we're approaching that critical resistance at 430, and we have this gap to fill down here just below 423. Now this is a bull trend until it's not, so don't get bearish just because we're going higher. We need confirmation price action is rolling over, and then we'll be looking for a breakdown below the 5 EMA, a gap fill below, and possibly a retest of this breakout at 420. So you can view this as a range now between 420 and 430. And if we break out above 430, we have very little resistance, which I call blue skies, until we get all the way into the 440s. So that should be a very impulsive breakout if we break 430 all the way up into the 440s. So that's why I say don't get bearish just for the hell of it. You need confirmation from price action that we're losing the bull trend. First sign of that will be the breakdown below this 5 EMA. Because we have such a strong bull trend, we need to see some cracks in the armor before we get bearish. So don't get bearish just because. Make the chart prove it to you. And right now the chart is still proving to us that it's bullish, which is evident by today's price action. Now there is a good chance the gap at 423 will fill, but we need to see that rejection from 430. So watch 430, 423, and 420. Those are your three critical levels to tell you where the next leg in this market is going to be. Remember, the odds favor higher prices because we still have a very strong bull trend, and the path of least resistance is always going to be in the direction of the trend. On the NASDAQ 100 triple Qs, we were down 0.02% today, so we had another day of going absolutely nowhere, which is no surprise because we're sitting right in the middle of the bear cave. Remember, I'm calling the bear cave the zone between 350 and 360. This is where the bear is likely going to set up a position because this bear knows there's little risk to do so because he could drive prices back down into the 330s. So I still expect there to be some type of tech correction in the month of June, which could easily take us back down towards 337 or 333. But like I just got done saying with SPY, we need some cracks in the armor. So we need the price to start at least closing down below the 5 EMA, which is going to require a close down below about 352 and then 347. Remember, if you're shorting the triple Qs up here, your risk level is still up there at 360, and you need to figure out how you're going to manage risk because we still do have a bull trend. Yes, we can go higher than 360, but this is a very critical resistance zone, and I don't think we're going too much higher without a pullback or some type of tech correction this summer. That doesn't mean I'm right, so let the price action do all the talking. On the Dow Jones, we were up 0.01% today, so we also went absolutely nowhere in the Dow, but we are building up a bull trend the longer we can hold above 336. 336 is going to be this bull breakout, which could take us back into the 340s, with upside resistance at 341 and 346. You can see today we bounced off the rising 5 EMA, which is right around 334, so things are looking a lot more bullish in the Dow Jones. So possibly we'll see money rotating into the Dow as we see this tech correction if we do indeed get it. On the Russell 2000 IWM ETF, we were up 2.63%. And again, this shows sector rotation because this was on very high volume. And we didn't see the other sectors like tech going anywhere today, so there's obviously money going into the small caps. We broke out above 178 and we're holding that breakout. We're back over the 200 daily moving average with the second daily close, and we're sitting right on top of the resistance just below 185. So IWM has a nice range between 178 and 185, and it's looking a lot more bullish the longer it can hold above 178, which means we could start running back higher into the 190s. However, that's going to require this break of critical resistance at 185, so watch that level, and if we get the breakout, you can get a lot more bullish because we also have volume supporting the buying. On the ARKK ETF, we're up 1.47%. We got the second day in a row of the breakout of the resistance, and even though we are getting a little too far overextended, overall this is bullish price action while we're trading above 41. That means we're likely going to 43 and then 44 and then 46. So we do have upside price targets as we're developing this bull trend, which is evident by the moving averages all stacked to the bullish direction and the bullish price action. On the VIX, we were down 5.23% today, and the VIX is almost off of the chart, now breaking down below 15, which tells us this is still a very low fear environment, which is exactly what you see in a bull market. Remember, low VIX is not necessarily bearish. The reason it was bearish last year because that was a bear market. So don't confuse this. A lot of people got this wrong this year because they're simply looking in the rearview mirror and they're only looking at what happened last year. In order to get more bearish, we need to see the VIX out above 20. On Bitcoin, we're currently up 4.6% and Bitcoin is trying to break down through that critical support at 27,000. And right now we were just outside the lower Bollinger Band and we're getting this little bit of a dead cat bounce back up to the breakdown. So we are still below 27,000, which means we're still likely trending down towards my price target at 24,000. We're not getting bullish until we get the higher high breakout above 28,000. On Amazon stock, we are up 1.05% and Amazon did make another higher high on the daily close as it's pushing higher towards my target at 128. And I'll remind you, you can stay bullish above 120, but that is getting a lot farther away. So you may want to use this risk level up here at 124. If we break 120, we're likely going through a correction that could bring us back down towards 113 to 114. On Tesla stock, we're up 1.7% today, and Tesla is confirming that bull breakout above the resistance at 215 with the second day in a row closing above this level. You can see the bull trend is quickly building, and Tesla is one of the last big tech companies that hasn't had a very powerful bull run. As you can tell, it's just recently breaking back over its 200 daily moving average. So I do think Tesla is about to go on a face ripper, which is evident by the price action breaking above 215, and my price targets above will be 230, and then that gap fill all the way up there, which is just below 260. So you can stay bullish in Tesla above 215 or the risk level down here right around 207. And remember, this has been a bullish breakout ever since we started breaking above 197. On Apple stock, we were down 0.21% today, and Apple is really just getting too far overextended outside the Bollinger Band and likely coming down to fill this gap below 176. Now, if we bounce off 176, it's still a bull trend of higher lows and higher highs, but we need to assess the price action once we get there. And remember, Apple did have an intraday all-time high just yesterday. So even though Apple is getting a lot of profit taking, it just hit a brand new all-time high yesterday. So that is not surprising in the slightest to see some profit taking as we hit these higher prices. You can watch downside support levels at 179, 177, and the gap fill just below 176. On the financials, we're up 1.26% today as we're right on resistance at the gap fill at 33, and we're going to be getting a lot more bullish on the financial sector if we can start breaking above 33 and establishing a bull trend, which is going to require a break above that 200 daily moving average. On the industrials, we're up 0.63% today, getting very close to the top of this trading range, which is going to be the critical resistance, and if we break out above it, we're instantly more bullish. On the healthcare sector, we were down 0.83% today, getting rejected from that resistance that I was telling you about between 130 and 131. However, we can't rule this out as a rejection until we get confirmation and a follow through, which is going to require a breakdown below 129. On the energy sector, we were up 0.81% today, trying to bounce back up towards the resistance at 80.5. And as long as we're below 80, I still think there's a good chance we're going down to fill the gap at 73. So jumping back over the S&P 500, we are at very critical resistance just below 430, and we do have gaps to fill to the downside. And while I don't necessarily expect to see a massive correction in the S&P 500, I do expect to see some cooling down in the big tech sector. That weakness in big tech could be offset in SPY by strength in financials, industrials, and healthcare. So take a look at all of those sectors and look for evidence of any rotation. If there's going to be rotation, it's very likely going to be this month because we do have the third Friday of June as quad witching and we could see a lot of money moving around. So have a trade plan, be prepared for anything, and then simply let the chart and the price action do all the talking, and you're going to do just fine. Don't forget to take advantage of my Memorial Day sale where you can still get 50% off bank trade alerts and the stocks channel Discord. Find out how to join those by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.